Another earnings call for strategy, and this one didn't arrive in strength. It showed up at the exact moment the market began quietly pricing, in the idea that the Bitcoin cycle might actually be over. Bitcoin didn't just pull back. It's bled continually from the highs of $126,000 all the way down to $106,000 on Thursday. No conviction in the bid, no real defense, no meaningful bounce, just a continual grind lower and silence. Treasury premiums, all but gone across the board. Conviction drained, retail vanished, funds rotated, and strategy, the flagship of the Bitcoin balance sheet era, dumped 7% into the close before the Q3 earnings call even started. Bitcoin bleeding and sentiment capitulating with it. That quiet, heavy tape that forces even strong hands to whisper, is the top in? Is the Bitcoin treasury model over? It didn't feel volatile. It felt final. But that's when the call started. No hype, no theatrics. Just calm, composed, almost cold clarity. The tone of a team building through noise, not reacting to it, not defensive, not rattled, just a very clear message. We're not playing the panic game. We're building the biggest balance sheet machine in financial history. And right when sentiment thought the story died, the fundamentals quietly stepped back on stage. Before we break down what actually mattered in this call, and why it mattered more than the last 48 hours of price action, please hit like and subscribe if you're enjoying this kind of content. None of this is financial advice, just financial entertainment. All right, let's get into it, and be sure to stick around to the end because that's where we talk about MSTR the monster. Heading into the earnings call, the setup wasn't just fragile, it was threatened. Bitcoin hadn't blown up, it had been wearing believers down for weeks. No crash, just a grind into the 110 range, then a clean tap down to 106,000 on Thursday. Not dramatic, just decisive enough to reignite the question whether the market has actually topped for the cycle already. That's the kind of price where you don't panic, you pause, you stare at the chart. You feel that doubt in your stomach. But the Bitcoin chart hasn't been the real carnage, it's the structure around Bitcoin that has. Most treasuries have already seen capitulation across the sector, chart after chart already in post-hope territory, and then Thursday came for the last one still standing, strategy, nearly 7% down into the close, before earnings, no headline, no miss, just a market saying this whole thesis might be over. This wasn't a sell-off, it was belief capitulation. That's a different kind of fear. Narrative erosion, the kind where you don't scream, you go quiet. And with this backdrop, strategies, Q3 earnings, call began. Before Saylor even spoke, Fong set the tone. Steady, controlled, zero theatrics, no hype, no sales pitch. Just a calm statement dropped like it was ordinary. We have a top 5 corporate treasury today. We are targeting number 1 within 5 years. Delivered casually, but it landed like a declaration of intent, no hype, no cheerlead. Just a goal stated like it's already on the roadmap. And in that moment you realize no one on this board is flinching. Then Saylor came in, not with metaphors, not with moonshots, but with operator energy. Measured, precise, calm to the point of being surgical. No sermon, no sales pitch. Just, we built the system, we're running it and we're scaling it. No defense, no persuasion, only execution. It wasn't evangelism, it was competence. And that's when it became clear. This wasn't a numbers call, it was an architecture call. So no, this call wasn't about quarterly results. The structure was the story, and this quarter, that structure didn't just hold, it tightened. These were the key messages, the ones that mattered. Strategy now holds over 640,000 Bitcoin, a treasury approaching $71 billion, making it one of the 5 largest corporate balance sheet reserves on Earth. The path to eliminate all convertibles by 2029 remains on track, replaced by a preferred equity engine that is no longer theory, but working capital infrastructure in public markets. Dividends remain less than 1% of Bitcoin NAV, a tax-efficient signal of strength, not dilution. They have an S&P credit rating, have met S&P 500 inclusion criteria, and are now expanding preferred issuance internationally, starting with Canada and Europe, and beyond that, a roadmap towards BBB and AAA credit channels where capital markets are far deeper. All anchored by the policies that defines this strategy: no chasing capital, no forced dilution, no growth at any cost. If the market doubts, they wait. If premiums compress, issuance pauses. The market resets, not the strategy. That isn't discipline as marketing, it's discipline as moat. And beneath those mechanics sits the real transformation. This is not just a Bitcoin treasury anymore. This is a digital corporate credit system designed to turn Bitcoin into productive corporate capital without ever selling the asset. Preferreds over converts, debt markets over dilution, tax-deferred yield over distribution churn, global issuance, not US-only capital. This isn't speculation, it's financial architecture, and that's why the earnings aren't the focus and the model is. Saylor reframed amplification in the cleanest way yet. Not leverage, not out Bitcoin. A corporate capital engine, accretive capital only. No dilution at the wrong price. No forced sellers, no rollover risk, no expiration. Infinite duration balance sheet. And when the questions turned towards price action, why the equity lagged, why the tape looked heavy, he didn't defend it, he reframed it. If your time horizon is short, use the product built for short horizons. That's Stretch, the cash flow instrument designed for traders, yield chasers, and rotation capital. If your conviction is multi-year, that's Bitcoin, the monetary asset. And if you're operating on a decade scale, that's Strategy Equity, the amplified Bitcoin engine with no expiration and no forced selling. Short-term mentality, use a short-term instrument. Long-term vision, use a long-duration equity. He wasn't just answering why the stock lagged, he was reminding everyone the model only looks wrong when the time frame does. This wasn't a plea for patience, it was a re-anchoring of perspective. If you want month-to-month dopamine, you're in the wrong lane. If you want decade-long dominance, stay where you are. And then he flipped the frame. The preferreds aren't a tactic, they are the product. Global rollout next, Canada, Europe, UK, Asia to follow. From triple B rails to AAA, from deep capital to deeper capital. Bitcoin as global collateral. Mission statement, give the world a tax-deferred 10% yield instrument. If Bitcoin is digital gold, this is digital sovereign debt built on top of it. They're not trading Bitcoin, they're monetizing it. Nation by nation, currency by currency. That's not a trade, that's a system build. And then the tone changed. Lethal, calm, inevitable. We want to build a digital credit market. We want to eat the world. I want MSTR to stand for monster, not hype, not internet swagger, a strategic declaration. This isn't about beating banks, it's about replacing the operating system of credit, permanent capital over fast capital. Yield without debt, amplification without leverage, a retirement rail for 1 billion people, not maximizing risk, erasing it, not gaming the system, building the new one. The equity isn't chasing Bitcoin anymore, it's onboarding the world into Bitcoin-backed yield. That's the institutional phase. And when markets questioned, he didn't defend, he clarified. Bitcoin bounced towards 110,000 after the call. Strategy retraced most of the drop. Not euphoria, competence, quiet confidence, structural confidence, the good kind. So where does that leave us? No fireworks, no sentiment flip yet, just the same truth it's always been. Strategy is doing exactly what they said they would, and the market will remember when it's ready. Architecture first, price later, quiet conviction, steady execution, monster mode engaged, and over the coming week, I'll be breaking down the big ideas from this call in detail. mNAV discipline, the global preferred rollout, and the long-duration amplification engine they're building. So make sure you're subscribed for those. Thanks again for watching, and I hope you enjoyed the video. Hit the like on your way out. And for those of you who want to go deeper into Bitcoin treasuries, check out Sovereign 21. The world's first private investor club for Bitcoiners focused on Bitcoin treasury companies and Bitcoin native businesses. Members get exclusive access to real investment opportunities, a monthly research report covering Bitcoin treasuries and the wider macro environment, and private peer-to-peer networking with serious investors and high-net-worth individuals. There are monthly roundtable calls to share ideas and investment theses, plus guest sessions with CEOs, CFOs, and analysts from across the industry. As the network grows, so does its reach, with the goal of opening doors to private placements, syndicates, and early-stage Bitcoin business opportunities. If that sounds like your lane, check out Sovereign 21. Links are in the description below. Thanks again for watching.